What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we saw selling across the board as we continue in this strong downtrend. However, we could be seeing volatility starting to subside. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today in SPY we were down 0.45%, and we did bounce off of that support level at 420. However, we are still closing below the 5 EMA, and we still have a strong downtrend. So it does look like price action is going to be stuck in this trading range between about 420 and about 428 until we get a breakout in either direction. It's going to look a lot more bullish for SPY if it starts breaking out above 428, because we do have a gap to fill just below 434, which is also where our 20 simple moving average is going to be, and that will be a bullish breakout if we can close above that level. So you're going to have critical resistance at 428, 434, 439, and right around 443, which will bring price action back up to our 50 EMA, and above that level we're going to be looking like we have a bullish breakout. Now, one thing I want to show you real quick is there's nothing special about moving averages. If you're strictly just following the price action, you can very clearly see we're making lower highs and lower lows. So this is still a very strong downtrend, so you don't want to be getting overly bullish until we get a bullish breakout. On closing prices, a bullish breakout would require SPY to close above 438, and a bearish breakdown means SPY is going to take out those lows and close below 416, and we still do have a valid price target at SPY 400 to fill the gap as long as we're in the strong bear trend. So if you're waiting to get bullish, you want to see one of these lower highs taken out with a higher high, and then follow that up with a higher low and a continuation of a bull trend. Right now, this is very clearly a bear trend, so try not to be getting bullish in a very strong downtrend unless you're an investor and you know exactly which levels you're trying to accumulate at. As a trader, you need to be very disciplined, very patient, and know exactly where your risk levels are. To the downside, we have support at 420, 416, 411, and our price target and gap fill at 400. So watch those levels as long as we're in the bear trend. And we're going to be a lot more bearish if SPY cannot break back above 428, which is going to be our very critical level. The longer SPY is below this level, the more bearish it's becoming. So watch all of these critical levels, and remember that nothing substitutes watching price action, because price action is king, especially in a very volatile market. Nothing will give you instant feedback like price action, so know all of your critical levels and watch exactly what the price action is doing at those levels, and then you'll know exactly which direction you should be trading in. Jumping over to the NASDAQ 100 triple Qs, we were down 1.11% today, and we did close above this level at 329. But again, we're still below all the moving averages in a strong downtrend. Our confirmed price target on the triple Qs is still down here at 315 as long as we're in the bear trend, and that will close the gap at that level. On the way there, we're still going to have support at 329 and 323, and don't forget about the previous low that we bounced off of intraday, which is just above 318. So those are going to be your critical support levels, and they're all valid price targets as long as we have the bear trend. And your bullish breakout at this point is going to require a close back above about 342, and then above 342 we'll have resistance at 347, 352.5, and the bullish breakout will be back above 355. So those are your critical resistance levels, and you shouldn't be getting bullish until we get bullish breakout and bullish confirmation in the price action. Just like on SPY, you can very clearly see lower highs and lower lows, and there's no telling how low a market that's downtrending can possibly go. So don't even bother trying to call a bottom. Just know your ranges and know your levels, and if you're accumulating, then know your levels you're buying at, and if you're trading, know your ranges, and then make sure you're having great risk management in a volatile market. On the Dow Jones, we were down 0.39%, and you're seeing a very similar story with price action below all the moving averages, and we still have the strong bear trend. Your critical support levels on the Dow Jones will be 326.4, 322.6, and our price target at 315, which is our confirmed double top price target. As long as we have the bear trend, it's more than likely we're trending down towards 315, and your upside resistance levels will be at 333, the 20 simple moving average, which is just below 339, and then you have that neckline breakout of resistance, which is going to be right around 340. Our 50 EMA is currently at 345, so we'll be looking a lot more bullish if we can close above that level. As you can see, all of these markets are trending lower, so wait for the bullish breakout in the price action before you start getting bullish. In the Russell 2000, we were down 0.18%, and so far the Russell 2000 is holding that support level at 197, but can't get the bullish breakout above 200. Above 200, you're looking for strong resistance at 205 and then 207. And above 207, your next bullish breakout will be a close above 212. If you want to be conservative, don't be getting bullish on the small caps until the Russell 2000 can close above 212. If the Russell 2000 takes out support at 197, you're looking for a retest of 191, and we could still have support right around 193.6, so watch that level as well. On the ARKK ETF, we were down just over 3.5% today, closing below this level at $60, and we still do have this intraday low and the closing price low right around 57.8. If that level holds up, we could still bounce off that level with resistance at 60, 64, and then 69, and our 50 EMA is just below 75. If we break down below the $57 support, you're looking for a trend down towards $50 because we still have the bear trend and we're still in the bear market. On the VIX, we had a very important development today because we did see the VIX going down over 6.8% on a day the rest of the market was going down. So this is telling us that fear could be leaving the market, and as you can tell, the VIX did close below our support trend line. We still have a bull trend on the VIX on the daily chart, so we can't completely say the VIX is done going higher, but at this point, this is starting to look like a bullish development. The way I would interpret the VIX going lower as the market's going lower is that fear is leaving the market, but there's still downside objectives that the market's trying to get to, and the selling is a lot more controlled and a lot more methodical, and there's a lot less panic out there. So we're getting to those extreme fear readings and the market is starting to get oversold. So at this point, if you see the VIX continuing to trend lower, that's going to be a bullish development. If the VIX closes below 24, that will be very bullish. And the next time the VIX closes below 20, we're likely going to be in a sustainable bull rally. So watch those critical levels and don't completely ignore the fact that the VIX was getting crushed today. On Bitcoin, we're currently down about 6%, and Bitcoin did slice right back down through that support level, and the price action is back below all the moving averages. So far, this is just looking like a dead cat bounce. Remember, if we break down below the neckline at 37,000, this is going to look like a double top, which means Bitcoin is more than likely trending back down towards 30,000. So you have very critical support at 37,000 and very critical resistance just below 45,000. If we break down below 37,000, you're still going to have support at 35,000 and 31,800. On NVDA stock, we were down 1.55%, and NVIDIA is still in the bear trend, but still trading above this support level at 223. If we break down below this level, you're looking for a retest of 209, and below 209, you're looking for support at 197 and 192. You're getting a lot more bullish on a breakout above 248, with resistance on the way there at 236 and right around 243. If NVIDIA could get back above the 250s and start closing above 270, that will look extremely bullish, and we could see NVIDIA starting to run back into the low 300s. But right now, respect the fact that it's in a downtrend and it's not looking bullish until it can at least close back above 248. On Tesla stock, we were down 2.41% today, and we did see Tesla getting rejected at the negatively sloping 20 simple moving average, so we did maintain the bear trend. We have this support level at 827 that's still holding up, but below that level, we're going to start trending lower down towards the next leg lower at 763 and then 709, and we still do have a confirmed double top price target down here at 592. Your bullish breakout is going to be back above 900 and then back above 937, so watch those as the most critical resistance levels. On the way there, you're still going to have resistance right around 858, so watch that level as well. On Apple stock, we were down 2.72% today, and we did see Apple coming back down to retest support at 157, and so far that level is still holding up, but you can't completely ignore the fact that we have the bear trend, and Apple is testing critical support. If we lose 157, you're looking for a retest of 153, and below that, you're looking for a test of 147. To the upside, you have resistance at 162, right around 165 to 166, and your bullish breakout will be 2 daily closes back above 168. So watch all these critical levels, and don't forget you also have the resistance trendline, which is going to be right around 163. On the financial sector, we were down 0.84% today, and right now the financial sector does have a full bear trend, but overall there's still this huge gap to fill just above at 37.6. So in the short term, I think it's possible we go fill that gap, but overall with the bear trend, once that gap is filled, we could continue to trend lower. There's no guarantee that gap has to fill now, I just think it's extremely likely. On the industrial sector, we were down 0.13% today, and we still have the bear trend, and we're getting rejected at the negatively sloping 20 simple moving average. Back above the 50 EMA will be looking bullish, and we'll likely go fill that gap at 106. On the healthcare sector, we were flat on the day, basically going nowhere, closing back above the 20 simple moving average and starting to lose the bear trend. The next time the healthcare sector can close back above the 50 EMA, it'll more than likely start gaining a bull trend and start trending up to close the gap at 141. The energy sector was up over 3% today, and it's still going up on very high bullish volume with bullish price action and a very strong bull trend. So there's still the likelihood the energy sector is still trending up there towards $81. If we see this sector starting to roll over, we'll close below the support trend line, and that should be bullish for the rest of the market because this money is much better off in other sectors that have more weight by market cap in the S&P 500. So jumping back over to the S&P 500, in the short term, we could be starting a bull trend, especially by evidence of the VIX getting crushed today. But in the longer term, you can still see this is a very strong downtrend. So don't be getting too overly bullish, even though we are starting to see some bullish developments in the short term. You're going to see the bullish breakout in the price action first, so watch all of these critical levels and just follow the price action. You should know exactly what you're going to do if the market breaks down below support and exactly what you're going to do if the market breaks out above resistance. If you're not sure what you're going to do in any event, then you're not prepared to trade a volatile market. So go back and study your trading plan and make sure you know exactly what you're going to trade no matter where the market goes from here. A good trader doesn't depend on the market only going in the direction they want it to. They need to know exactly what they're going to do no matter what the market does and have a plan that works in either scenario. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility in a brand new trading year, now is the best time to be a bank member. You can find out all the information about Bank Trade Alerts and learn how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.